Hello there, good evening, and welcome to another episode of Business Focus here on TV3 with me, Michael Obodu. Now, tonight on the show, amid rising Middle East tensions, we assess the impact of the US-Israel-Iran conflict on global oil markets and the likely effects on fuel prices in Ghana. We explore how flexible financing options at the National Home Ownership Fair 2026 could help more Ghanaians achieve the dream of owning a home. As always, Business Focus is sponsored by EcoBank and Telecel. We will bring you updates now from the currency and the commodities market to give you a fair idea of how the major trading currencies are faring. Now, the dollar is at 10 cedis 71 pesos, will be sold to you at 10 cedis 72 pesos. The pound will be bought from you at 14 cedis 32 pesos, sold to you at 14 cedis 33 pesos. The euro also be bought from you at 12 cedis 51 pesos, sold to you at 12 cedis 52 pesos. But be guided that these figures are interbank rates and would be higher at a Forex Bureau near you. On the global commodity front, we bring you updates now from gold, cocoa, as well as crude oil. Give you a good appreciation of how the international market is faring with these commodities. Cocoa is up. It's at $3,008. It's up by some $120. Gold is also up. It's at $5,297. It has gone up by some 18.53%. Crude oil, as expected, also is up. It's at $77.22 per barrel. Is up by $4.39 per barrel. And all these were expected, especially with the tensions brewing up in the Middle East. And it's part of the conversation we'll be having today to see how all of this finally impacts on Ghana. We'll turn to the Treasury bill market now and bring you updates on the various rates for the various Treasury bill packages. We do know that government hit another oversubscription, actually tripled the target it hoped to raise. Sign of growing investor confidence in Treasury bill fronts. Of course, with significant gains, we've seen inflation very low, makes these look relatively attractive. 91-day bill is at 5.32%, 182-day bill is at 6.98%, 364-day bill is at 9.76%. And those were updates across various international markets. But then every day people face different emergencies. Police emergency, fire emergency, medical emergency, you name it. But many Ghanaians don't know their emergency numbers. Well, here's one you would always want to remember. Star 770 hash. Yes, star 770 hash is the new EcoBank Money emergency number. Star 770 hash gives you instant access to loans, fund transfers, utility payments, airtime and data purchases, and so much more, even without data. So there's no need for you to panic when you find yourself in any money emergency. EcoBank will always come to your rescue. Dial star 770 hash now for solutions to your money emergencies. EcoBank, the Pan-African Bank and proud sponsor of Business Focus, as well as Telecel. My name is Michael Obodu. We'll go for a quick breather. When we come back, we'll delve into our topic for today. Stay tuned. It's already sending shockwaves through global energy markets, with oil prices rising sharply amid fears of supply disruptions. Now, analysts warn that the situation could worsen if the crisis disrupts shipments through the Strait of Hormuz, a strategic route that carries roughly a fifth of the world's oil supply. Now, a development that could push crude prices even higher and translate into increased pump prices across important countries like Ghana, with global oil markets reacting reacting quickly to geopolitical tensions. The big question is how vulnerable Ghana is to these developments and whether consumers should brace for another round of fuel price increases. Well, to help us digest today's conversation, joining us today on the show, we have Dr. Patrick Ofori. He's the Chief Executive of the Chamber of Bulk Oil Distributors. Duncan Amoah is the Executive Secretary of the Chamber of Petroleum Consumers Ghana, COPEC. We also have Abbas Ibrahim Tasonti. He's the Director for Economic Regulation and Planning at the National Petroleum Authority, NPA. Thank you, gentlemen, for joining us on tonight's show. I'll start with you, the regulator. Abbas, first off, are there reasons to be concerned as consumers of petroleum products at the moment?
Yes, any consumer of petroleum products will be concerned about what is going on. But the concern has to be looked at within a certain context. What really will be the concern for Ghanaians? Generally, there are concerns about whether there will be products available for consumption. Then also there's a concern about the impacts this war will have on prices. And so consumers have every right to be concerned. But I think we as a regulator are there to ensure that these concerns, we manage them. So to a large extent, I would say that, in fact, I would say that for concerns about availability of the products, that should not be a problem at the moment because we have enough stocks and we have enough products planned for delivery into Ghana. But the concern that is very realistic that will manifest will be the impact on prices, and that's something that we've already seen happening. In fact, before the war started, the anticipation that this war was likely to happen had already caused prices to go up in the first 2 months of this year. And that's how come we saw prices go up in the previous window. And also this window that just started yesterday, prices have started going up as well. And so now that the war has happened and we've already seen prices rise, this morning when the world markets opened, diesel, for example, rose by about 17%. Crude oil prices are also rising. We are waiting to see what the closing numbers will be for today, so we can compare properly to what the closing numbers for Friday was. But definitely prices are going to rise. And so throughout this week, it's expected that once the war is ongoing, prices will continue to rise. And this will definitely reflect in price in our domestic market. Because we are a net importer of petroleum products. Not only that, most countries, whether you are a net importer of petroleum products or not, will also be affected because the prices, as we all know, are traded globally on the global market. And so they affect every country in the world.
Interesting. You say we have enough supply in the interim. Give us the details. Who has what?
So, as you know, one of NPA's core mandates is to ensure availability of petroleum products in the country to avert shortages at the pumps. And that's what we've been doing all these years, ever since our existence. And that's why you hardly hear consumers in the country having shortages at our pumps. We do this on a daily basis. So what we do is we monitor stocks. And so based on the current stocks that we have diesel that's lasting us about 5 weeks of consumption. And we also have petrol that's lasting us about almost 7 weeks of consumption. And so with this in tank and also with the scheduled deliveries that we have, we don't anticipate any shortages at the pumps.
Just to clarify, when you say these stocks are available, is it what is held by BDCs or what OMCs have at their stations, or strategic reserves that government is holding in trust for consumers?
No, I mean products in the depots before the BDCs left. And before the OMCs left to the filling stations, that's what we talk about. Lifting is ongoing, done on a daily basis. So every day, products are being lifted from the various depots in the country. So I'm talking about stocks that the BDCs are holding in tank. Okay. Government is not holding any strategic stocks as we speak. What we've done is that because of logistical constraints and all of that, the import plan that we have and then the stocks that we hold, that's just as I mentioned, becomes more like what we have as a buffer. So we don't allow stocks to deplete before we import to augment what we have. So on a daily basis, products are being discharged in tank, and on a daily basis we are consuming. So and then the domestic production is also happening. which is adding to the stocks that we have intact.
I'm sure you give us more details too, because we know that at least there's that function also of a government buffer that's supposed to also help in cushioning all of this. And maybe you can help us appreciate where we really are with that from the government side. But let me speak to Dr. Patrick Ofori on all of this. Doctor, your initial comments on all of this. How do you as BDCs feel with all that's happening with US, Iran and Israel?
Well, nobody is happy about a war. Neither is anybody also happy when the level of uncertainty becomes so high. And as an industry player, you'll be worried when you hear that oil infrastructures and LNG plants are being targeted. Clearly, it's a cause for concern. But like Abbas have stated, in terms of supply, we have enough to take us through the period. And as we also already have vessels that are lined up in the queue to be discharged to also augment what we already have in country. But what we may be impacted on is the pricing, which, as we all know, are not necessarily determined by factors that we can control domestically.
Now, Doc, really, if global prices were to spike to, say, over $100 per barrel, how long would it take for us to begin to feel the impact of such a development at the pumps?
It will be immediate. Abbas will not be happy. He will be waiting that you wait to the next window. But on a daily basis, transactions are being made. So if I'm to trigger a price, and like he himself admits, and he's waiting to see how the international prices are going to close by the market is going to close. Definitely, if I'm making a transaction tomorrow morning, I'll use the price that I'm picking globally to also, and then the current exchange rate. But the good thing is that the CD has performed relatively well. If you check today, it was around, I think, 10.7, which is somehow a bit lower than how we closed last week would. So those are the factors that may also inure to our benefit if others will be shifting into commodities like gold. And as we export more, we can then have a strong currency to maybe augment the international price hikes and due to the relatively maybe the gain that we'll make from the exchange rate. But if that does not happen and the CD is not also strong compared to what is happening, then it means both the two major determinants of prices at the pump, if all is going against us, then it means we are going to lose and we are going to pay more at the pump.
But at least when you talk about the gold bit, it means that all is not yet lost for Ghana. If the circumstance continues, it means that gold prices will continue to pick up and then still sort of shore us up. But Abbas, you heard Doc make a comment about the fact that if global crude prices were to spike today, you'd expect it to reflect immediately on the price at the pumps. But you also have a floor price that you announce per window. How does all of this play out finally?
So I think I'm sure you heard Doc say Abbas will not be happy about this. And that is because we have generally 2 windows in the month. And for each of these windows, we have a pricing guideline that determines how the world market price that feed into the prices are done. And so generally for the first window of March, for example, we would use the daily averages from the 12th of February to the 26th of February. So we already know the average FOBs that are going into this month, into this window's pricing. It doesn't mean that some players or some BDCs may not be using something they call trigger to trigger some volumes within the course of the window if the prices favor them. That is sometimes done, but generally we use the averages that we publish. And so you know MPA publishes what we call the daily price indicators. And that only shows the FOB price that is used for every window. And so, like I said earlier, we anticipate that these prices the increases we are seeing now because of the war will be felt more in the second window of March, and not now, because for now we already know what the increase is. We're already expecting price increases this window because the FOBs rose compared to the second window of February.
Interesting. But you see, in the midst of all of this also is the risk of panic pricing and hoarding. How are you working to prevent this from happening?
So hoarding is another thing that people usually fear will happen when prices are on the rise. But the good thing is that the NPA, like I said, we know the stocks in the country. We know the country is well supplied. So if all of a sudden a station or some OMCs are not selling what they have, there's a way we can verify that because we know the liftings of all these OMCs as well. Luckily, we also have the ATG system that helps us to know stocks in the number of the retail outlets in the country. So where consumers report that they are not getting fuel in a particular location, we can use the ATG to verify whether the station really has stock the products in tank and are refusing to sell or not. So all these tools help us to confirm whether the company is deliberately hoarding and not selling products to the country. No OMC is allowed to hoard products when they have products to sell.
But let me go back to Doc on this. We've heard happenings about in the Strait of Hormuz. We know some vessels have already been shut down. Help us understand what volume or what percentage of the volume of products that we rely on in Ghana, for instance, goes through that route, and should we be so concerned about that particular move and how it's going to affect us?
Fortunately, you check the supply route at the channels. We are not part of the countries that will be affected by that. And if you check over 20 million barrels a day that passes through that stretch, I think 80% also head to China. So that is where they are going to be impacted. But what we normally talk about a ripple effect is that once China, with all its resources and the cash paying for these products, are not receiving them, they may turn to the traditional routes where we normally, the WAF region, will also source their product from. And that is a situation whereby prices within that route will also go up because there is more, let's say there is, like normally the common expression in economics that there is huge demand chasing a supply that traditionally is expected to meet a certain demand proportion. But here is the case that there is that shift that has also increased the demand for that limited supply from that region. And that is whereby prices will go up and we may impact on that. But the good thing is that most of our partners currently have been able to strike some partnership with Dangote that normally there is that transaction happening within the WAF region, and with a lot of conversations and the discussion ongoing, whereby we are even seeking to benchmark and have a pricing indicators for the region. Is something that we're hoping that we can invest in more infrastructure and logistics so that some of these international geopolitics will not have direct consequence on our operations and then also our citizenry.
Okay, we'll come into the whole sub-region conversation and energy security, but oilprice.com has published that diesel prices are up by 17%. How are you as key players in the industry reacting to that particular development?
So I don't know if this goes to me or to Doc.
To Doc, then I'll come back to you, Abbas.
I think, Abbas will admit to the fact that if every commodity, the way it is priced, is that transparent as how petroleum products are priced in this country, we will not have a situation whereby people will still say that, oh, these are old stock. The competition that exists among us, so issues like hoarding and others that you are talking about, if I have an agreement with my supplier that the payment is due Friday, I will quickly want to dispose of the product so that I can get access to cash to be able to buy the required for us to be able to settle. So all those elements, whereas it may be common in other sectors of the economy, these are activities that are rare, and then even if you do engage in them, the regulator keeps a close eye and you can't be punished or you can't be sanctioned for that. So when you see prices going up, clearly you can also see that it's transparent, and that because you see the international prices have gone up, like you said, diesel prices have gone up by 17%. the gains, we cannot necessarily push that if we are able to gain, the city is also able to appreciate. And you will clearly see that the entire 17% may not necessarily translate into the pump price because maybe on the currency level, the city has appreciated against the dollar. And that explains why you may not see that 17% increase at the pump.
Okay. I think Duncan Amoah has joined us, the Executive Secretary of the Chamber of Petroleum Consumers, Ghana. Duncan, quite interesting times for consumers. Are you worried?
Michael, I do not know anybody across the world that consumes energy of any shape or form that will not be sitting on tenterhooks at present. You do not even know how far would this stretch, how long is it going to stretch. Again, we are now talking of supply security, but if this was to prolong, you will get to a point where cargoes are not even coming in any longer. And so for now, it's optimism. You hear from, of course, the industry, and they are hopeful that they will be able to sustain the market. The regulator says that you have some stock that should be able to last you a couple of weeks. It is all optimism, but as to whether that would hold sway or at the end of the day, the reality would be a bit far-fetched from what we are hoping it becomes. Only the coming days would decide. But clearly, these are not very pleasant times at all if you are a consumer watching the space.
Now, this is not the first time we have had something of this sort happen. You know, last year when the U.S. hit some targets in Iran, we saw some spike, but things settled over the couple of days or weeks. So to some skeptics, maybe this will also settle in no time. Maybe I'll pick your thoughts individually on all of this. And on the back of the fact that BP also just announced that it will boost its shale output in the next couple of days or months as part of efforts of boosting outputs. They are looking at increasing by some 8% to about 500,000 barrels per year. How does this development, especially with what's already happening, put us? Maybe we are being a bit too worried, wouldn't you say? Duncan, maybe you can comment on that.
Michael, let me be frank with the numbers.
Okay.
I do not think that when you are dealing with a 22 million barrels per day, blockade on the Straits of Hormuz, inputting 200,000 barrels, as I heard OPEC had indicated earlier, would be able to mitigate the issue. Even if you were to put in additional 1 million barrels globally, just to mitigate the tensions, which has now led to about 22 million barrels daily, averagely, that goes through that channel. I don't think that it would naturally suffice. The best bet for all of us is that the conflict eases. There's some understanding to prevail. All sides will lay down missiles, and then the logistics companies, the shipping lines, will be able to resume full cargo operations. But if that does not happen, these announcements, 200,000, 500,000, Michael, the shortfall, the gap is 22 million barrels daily. I do not see how that could be mitigated. But like I indicated, there's already an oversupply situation. There's a glut, which means that we are not headed for any shortages immediately. We are not looking at a situation where the price spiking situation should be doing $150, $200. We could manage that for some time, but how long is that time? That clearly is the answer none of us can give at this point, beyond the fact that, of course, there's already a spike. There's already writings on the wall that on the average day that this impasse or dispute or fighting within the Middle East is not resolved, you are simply losing 22 million barrels daily, and that will compress at some point to, clear out the oversupply.
Well, I think we're having challenges with Duncan Amma. But Doc, let me come to you. Realistically, looking at the numbers, I'm looking at the graph right now. As at Friday, global crude prices were at about $73.
You and I were very good, please.
Oh, yeah, Duncan, I think we lost you for a moment, but let me go to Doc briefly. Doc, as at Friday, crude prices were at $73. It spiked to about 78, 79 throughout the weekend, and it's resetting as we speak. It's dropping again during the day. It's come to $77. So it means that relatively it's just gone up between Friday and now. It's some about $4 increase. Aren't we making a big deal out of this, don't you think?
You cannot necessarily say you are making a big deal out of this. Now others may be releasing what their strategic stock in to avert the situation, and then also they wouldn't necessarily want to create a situation of a bleak situation that will cause a bit of pressure on the main actors to ensure that they broker a peace deal. But definitely when you pick signals that the retaliation that is happening is hitting oil infrastructure, then you need to be worried, not only about the crude product going to China that is seized. There is also a potential issues that impact on other energy. So you look at if Qatar, for instance, have now put a freeze, have stopped LNG production, definitely Europe and other countries that rely on LNG from Qatar to supply, and we're still in the period of winter that to also do their heating, you expect that they are going to turn into diesel. So obviously the demand for diesel is also going to go up, and which will automatically be translated into prices affecting our part of the world, because irrespective of where the product is, once there is a market for it, you expect the traders to move their vessels and their logistics to where the demand is and who is willing to pay for that. And you should expect that Europe in these weather conditions will want to find a replacement to LNG that they are not getting from Qatar.
Interesting. Abbas, let me come to you on the issue of energy security in the sub-region. We are seeing a number of refineries spring up in the sub-region. Quite a significant amount of crude also comes from the continent. For you as a regulator, what are your efforts really in plugging into that sub-regional ecosystem to ensuring energy security for Ghana?
Indeed, domestic production and sub-regional production is always an advantage to the economy, to the country. I think we've had our stock levels being very healthy for some time now because of domestic production. If you look at what Central is doing, for example, about 30% of the country's demand is good. Without that, it means we'd have been importing virtually everything. And so, as I said earlier, if TOR also comes back and adds to that, that's very positive for us, which means we'll have to reduce our reliance on imports. All that we're focusing on will be importing crude oil. Now, this crude oil mostly will come from Nigeria, so that's very close. The advantage the sub-regional production is giving us is because, Central has, Dangote is producing now. Imports into Nigeria have been stopped to a very large end, particularly for diesel, because they have enough diesel to meet demand. What that has done is that it's caused a lot of products to be available for Ghana. If you know the West African sub-region, the trading, the hub is really offshore Lomé. That is where all the large vessels come to and then do what we call the STS. So they do the ship-to-ship transfer before the products move to Ghana and Nigeria. Now that this Nigeria market is lost, Ghana has become the main target for supply. And so we've had very healthy stocks. We have products sitting in offshore Lomé as we speak. In fact, data from S&P Global Plus today is showing that we have the record floating storage in Lomé as we speak. We have about 4.2 million barrels of diesel in offshore Lomé as we speak. The majority will be designated to Ghana because Ghana is the other biggest market in West Africa. Without Nigeria, we are the next. And so we have a lot of vessels around which are ready to supply us petroleum products. So domestic production is always an advantage to the economy. We don't have to go far to bring products to Ghana. And so I think we need to focus on getting our domestic refinery improved. And so we are happy to see our Thor coming back. We are happy to see Central producing. It has really helped us. The other thing that the domestic refinery usually will do for us, which others don't look at, is there are other products like aviation. And aviation fuel is not really a small product, but the market is small compared to diesel and petrol. We have that. If the refineries are producing very good numbers, we wouldn't have to import in that a lot. We have LPG, which if our refineries are doing very well, we will get to a point where we may not need to import LPG. There are other products that we get from refining crude oil that will not need to be imported. Fuel oil is one of them. Until Thor stopped producing the last time, we never imported fuel oil. It was always available for based on domestic production. So it reduces our dependence on imports. Again, if Dangote was producing enough to meet the sub-regional demand, we realized that we will not need to go all the way to Europe to bring products to Ghana. And so with all these wars happening, we will not be scared that products will have to come all the way using certain routes that are now dangerous and causing insurance to go high. And so proximity to domestic action is always an advantage to us. And we need to pray and hope that our countries or our governments in the West African sub-region increase domestic production.
All right, thank you so much. Duncan Amma, you have the final say. You've heard NPA quite reassuring that we are in a good place as a country when it comes to energy security. He's spoken about Tema Refinery and also about Central. Those are, I would say, projects that have literally been your baby because you have been trumpeting the importance of us as a country refining our products. So your final take on what Abasa said so far, and then maybe we'll call it a day.
Mike, I would be happier if, one, we are indeed investing in Temoyo Refinery. We are getting a reformer chamber, a desulfurizer. We are probably modernizing the RFCC to ensure that the plant is not only efficient, but also modern, can give you the standard products that the BDCs bring in. At present, without the investment, you can turn on a plant, but what you produce or process will be difficult to consume due to the Ghanaian local standards that are higher than what the plant has been originally configured to churn out or produce. Again, you are also sitting on a lot of gas that you should probably be able to harness in a time like this. And so if you're looking at the fact that a train is working but not sufficient, we're still importing significant volumes from the West African gas pipeline, whilst we could develop infrastructure locally to even process gas for energy generation or, as it were, power generation.
At least we know about GPP2, right?
Yeah, the GPP2. Yeah. That is long overdue. We need to take a look at it again. And then again, in all of this conversation, BOST is quiet. BOST is out. In the past, you've had people say, let's rebrand BOST to Best Bulk Energy and Storage. I would want to say that that is not what the object of setting up BOST has been or was. They should go back to their core mandate, for which we use the taxpayers' money to put up those tanks.
There were even some concerns that BOST was beginning to act as a BDC instead of its strategic role as a strategic stockholder. But anyway, that'll be all time.
Michael, there's been a time BOST has competed fiercely with BDCs, and in the end, what BOST output has been is that they've made profits. We should clap. This would have been a very good time to fall on BOST's reserves, right? To say that as a country, we have strategic reserves that were bought at, say, 700. And so now that is probably going to jump to 800 or 900. BOST says, no, you don't have to panic. I have enough. No. I can still trade you at the old price, such that you don't even have to bother. But the stocks we are talking about are largely, BDC stocks private capital stocks.
Exactly.
I do
Abbas
not
actually confirmed all of that. But would have to leave it here. Duncan Amma is Executive Secretary of the Chamber of Petroleum Consumers Ghana, COPEC. Duncan, thank you so much for your time. We also had Abbas Tansonti. He is the Director of Price Regulation at the National Petroleum Authority. We also had joining us CEO of the Bulk Oil Seaboard, Chamber of Bulk Oil Distributors, Dr. Patrick Ofori also joining us. This is Business Focus here on TV3. We're going for a quick breather. When we'll come back, we'll bring you more conversation. Stay with us. Welcome back to Business Focus here on TV3. Just gone past were some financial tidbits from EcoBank. Now, with rising property prices and financing challenges putting home ownership beyond the reach of many, stakeholders in the housing sector are increasingly exploring innovative solutions to make housing more accessible and affordable. Now, as preparations gather momentum for the National Home Ownership Fair 2026 here in Accra, from the 4th to the 5th of March, the focus is on connecting prospective homeowners with practical financing options and industry players who can help turn that dream into reality. The Chief Executive of the National Home Ownership Fund, Prosper Hoitu, joins us in studio. Thank you so much for your time, sir.
Thank you, Michael.
All right, always a pleasure to see you.
Pleasure to meet you.
Okay, so quick one. For those who don't know what the NHF is all about, your Home Ownership Fund, tell us, what really do you do?
Thank you very much, and good evening to your viewers. The National Home Ownership Fund essentially is about making home ownership accessible and affordable to the Ghanaian.
Literally.
And when we say that, many people wonder how we are able to achieve that. And so we are able to achieve that in a combination of ways. For home ownership to be affordable and accessible, we need to empower the Ghanaian to be able to, with various financing options, to be able to acquire these homes. And we are guided by data, which states that about 60% of Ghanaians require some form of financial products and intervention to be able to own homes. And that is the essence of what the fund does. And so that's why we run the National Mortgage Program, which is a very low interest mortgage scheme. And we are able to achieve that because government supports the fund and for us to be able to partner financial institutions to run the scheme. And we have the lowest interest rate on the market, which is in the 13s, but with the treasury bill rates coming down, interest rates coming down generally, our current review points to a single-digit interest rate. Yes, in the next couple of weeks, when we begin to issue mortgages, don't be surprised that we should be quoting between 9 and 10% interest rates on our mortgages. And how does that promote accessibility and affordability? It means that with lower interest rates, many more people can qualify to access mortgage, and also the monthly repayments of mortgage will be lower. It will be smaller, so many more people can do that, so that you don't use your entire income servicing mortgage. And so that's how the scheme works. But the other alternative product the fund runs with GCB Capital is the rent-to-own scheme. And the rent-to-own scheme helps to people to occupy properties, and then they pay rent, and part of the rent is a contribution towards the eventual purchase of the property. Now, we are also able to promote accessibility under the scheme because unlike the traditional mortgage that requires deposits, like initial deposits, so assuming you are buying a property worth 300,000, under the traditional mortgage, you are required to pay about 20%, between 20 and 30% deposit of the total price or cost of the property. But under the National Mortgage Scheme, we advance you 100% facility, subject to your qualification. I mean, because the banks that we work with will definitely run some checks on you in terms of your salary level. But it also allows people to jointly apply. So spouses can combine their incomes to be able to access the mortgage. So as much as possible, we want to eliminate barriers that impede people's access to mortgage.
Sounds exciting. Speaking about affordable mortgage, hoping to enter single digits. You're speaking now about rent to own.
Yes.
Now, these are all part of conversations that will be happening at the National Home Ownership Fair, right?
Yes.
Tell us about the fair. Where is it happening? When? And what should we really expect?
So the National Home Ownership Fair is happening here in Accra at the ministries. We are hosting the event at the old office complex of the Ministry of Gender, Children and Social Protection, which is opposite SIGA. State Interest and Governance Authority, within the same enclave as the Audit Service and the Controller and Accountant General. It's not a place that you miss. And so we strategically chose that venue for purposes of accessibility. We know that a lot of workers work within that enclave, at the ministries, public servants, even all around Tudu, Ridge area, Osu, so that people can easily come around to participate in the fair. And so we are going to open it on the 4th by 9:30 a.m. So between 9:30 a.m. and 5 p.m. we are there.
Okay.
And we have exhibitors, developers, financial institutions. In fact, one of the anchors of what we do is to promote education, because you see, people need information to make the right decisions when it comes to home ownership. Do you know, for instance, that some of the exhibitors come in, they will give you flexible payment terms if you want to acquire land. Okay. Did you know, for instance, that some of the banks have facilities that they can give you to buy land or to improve your home or to complete your home? So if you have been doing your project for many years and you've been struggling paying rent and also squeezing in to be able to complete your project, you can just get an intervention by getting a facility to complete and moving. And then you will settle that with the bank. Wow. So all these opportunities, you can use your pension contribution to purchase a home. But how do you go about it? Somebody has to give you the information. Exactly. And so if you fall within all these categories, or a young professional, you're a teacher, a nurse, a doctor, a journalist, that you think that your home ownership dream is elusive, we are giving you hope. We are telling you that just come to the fair. Visit our stands, join our panel discussion. There are experts there to guide you. Even the property acquisition process requires some knowledge and guidance, and which we are willing to provide.
And all this is happening on the 4th
and the 5th of March.
At the old Ministry of
Gender Office premises.
Okay. Yeah. Is there any way we can reach you out, if there's a contact or something, or a website? Social media? Yes, social media. So you can go online, nhf.gov.gh, and you can access our contacts and any other information. Participation in the fair is absolutely free. You don't need to pay anything to participate. I'll be there.
Yeah, so please, we look forward to seeing you at the fair.
All right. Mr. Hoyte, it was nice talking to you. That was the CEO of the National Home Ownership Fund, telling us about the fair that's happening on the 4th and the 5th, bringing you up close with all you need to know to help you own a home. If you are looking at acquiring a mortgage, there's an option for. If you want to build yourself, there's an option for you as well. And it's going to be exciting. So home ownership can be a reality. So be part of the fair. I'll be there myself and get all the information you need. That'll be all for today's edition of Business Focus. For more stories, visit our website. It's 3news.com/business. I am Michael Obudu. Thank you so much for tuning in. As always, please stay safe. Catch you next week.
Business Focus is brought to you by EcoBank, Telecel,